Hey, what's up, guys? Welcome to the Accelerated Weekly Training. Today we're going to be going over trends and market structure and kind of the trajectory versus momentum. So it's kind of a fun little tricky nuance that happens on all time frames and whatnot. So anyways, it's an important thing to understand or to at least try to get a grasp of. So that's what we're going to go over today. So first, as always, got to throw up the disclaimer, make sure that we're all square there on the legal side of things. Again, this is not any kind of investment or trading advice. I'm not making any recommendations. This is strictly for education and for, financial entertainment, you could say. All right, so let's dive in. All right, so anyway, so this is the NASDAQ as of today, and this is the 30-minute chart. So I just thought this would be a good way to show exactly what I wanted to kind of explain. So when we talk about market structure, we talk about support and resistance levels and the trend itself. The way that I define that in the price action kind of world, where we're just looking at essentially a bear chart with some candlesticks on it, is... Let me throw this on as well, even though it's a little distracting. Actually, I will leave that off. All right, and I'll just point it out. So anyways, we define a trend, or as far as market structure goes, is going to be a series of higher highs, higher lows, followed by higher highs, higher lows, and then same thing for, or the reverse for a downtrend, right? So lower lows, lower highs, lower lows, vice versa, right? So that's what we're going to see here, is we're going to see essentially low made, higher high, higher low, higher high, higher low, high low, high ho, high. So anyways, so that's what we see again when you're considering market structure and a trend, right? So what happens when we break that, when market structure is broken, right? Does it mean that price is automatically going to reverse, head in the other direction? Not necessarily, right? That's just part of what happens, and I believe a big part of the reason, or not necessarily the reason, but the reason behind maybe the moves that happen when structure is broken is because it's an easy place for people to place their stops. And so what we see is we're going to see very, very important, support and resistance on higher time frames. And when those support levels and resistance levels are broken, the moves tend to be more significant. And sometimes that does signify the beginning or the end of a trend, right? But not always. That's the tricky part about trading, right? There is no 100% all the time magical scenario trade, whatever, right? Everything is nuanced. Every moment in the market is 110% different, because there will never ever be the exact traders with the exact situation and money and trades entering the market at any given time ever again, right? It's always different. So anyways, that being said, so let's take a look at this, right? So this last piece here, right, where price comes down, we have a retracement here, and then a new high is made, and then it comes down and it tests this previous low, and then it doesn't make a new high, and then the price drops and breaks, and essentially breaks market structure here, right? So this is now a broken trend as far as market structure trend is concerned. Right, so what I wanted to talk about today is kind of gauging the difference between momentum and the trend structure. So momentum, trend momentum, and trajectory versus trend market structure and a trend. Right. So what we see is that even though price was broken down here, right, the momentum of the market was still to the upside, right? So we're going to see that continue to work its way back higher as we run through these pieces here. This low is tested again, and then price moves higher. Okay, and what we don't see here, as I will throw this up as well, is this is technically another trend line that could have been made here. Okay, so at this point, price breaks this trend line, but price still just kind of moves sideways. So generally we'll have, after a trend line is broken, we'll have either it'll quickly find support after it breaks down, and then it'll head up to new highs, or it will just run through the trend line and it'll kind of consolidate, and then it'll make a decision after that, or price runs through the trend line and then things are on a reversal type trajectory at that point, and they continue to move lower until either the market figures out what it wants to do, and then the downtrend is continued at that point in a full reversal, or it's eventually moved back up with the larger trend. With the so when I talk about momentum and trajectory, right, I'm more referring to the trend line at that point and the overall movement of the market. Like, you can just see that the overall movement of the market is higher. The tendency of the market at this point in time is to the upside, right? So what do we do with all this? So what I like to follow is I like to follow both, but generally you're going to see, depending on where the trend's at, you're going to see the trend structure break down after the trend line is broken. And then what happens after that tends to be, in my opinion, the kind of the most important key there. So you can see there's another trend line that could have been drawn here as well, and then here, and then once price broke that trend line, then the market structure was broken, and then at that point, it's up to us to watch things develop and see what happens after that point, right? Does the structure continue to work its way lower at that point, or does it kind of stall out and move back to the upside? So like we see here, price breaks the trend line, moves higher. Again, now we're on a series of working our way back through higher highs, higher lows, a consolidation, and then a bump higher here. So now, at this point, we've got our 45-degree trend line that we always talk about as far as being the most sustainable of trends. And so this morning, there was an interesting move that happened, which kind of sparked this conversation. And so now that we have this trend line established, price was pulling back, and it broke through the trend line into a consolidation pattern, and then we broke out to the downside. And as you're seeing now, price is looking like it wants to break it back out to the upside. So a little bit of context with this is that we want to follow where price is leading us, right? But one of the trickiest parts about trading is the nuances between the price action and the trend and where the market seems like it wants to go versus where the market actually is going, right? We have our longer term trends that we want to follow, but there's lots of things that happen in between the continuation of that trend, right? So I'm going to bump this down to a smaller chart. This is the chart I was looking at earlier. And so we have a little bit of yesterday's structure. And so as price got to the 8:30 time frame, price broke down in a significant way. So at that point, we have yesterday's value in the TPO and the market profile was established to the upside yesterday. And so at this point this morning, things were being rejected lower away from the point of control and the value area low to the downside in a significant way. So at that point, right, the combination of everything we looked at, this says it looks like the market is wanting to take a solid move, or at least wants to take a solid move in the other direction, right? So we're using all of these different things to be able to gauge, again, momentum. We're looking at the structure, and how is that going to continue once we've broken the trend line, and then once the structure is broken, right? So now, when things broke down to the downside, at that point, you have to pick a direction, right? You go, okay, at this point, do I want to focus on the upside, or do I want to continue to focus on the downside? So as price came back up into yesterday's value area, which is this was the point of control and this is the value area high and the value area low, at that point, things look like they want to move lower. So there's nothing wrong with waiting for price to retrace, just like it did, to get essentially a solid risk reward, anticipating a price movement to the downside at that point, right? So, and that's exactly what we got. We got a nice move to the downside. It broke the new uptrend line that happened, and but ultimately, price found support, and now things are breaking to the upside. So, all of that to say that a move like this has the tendency to fake out a lot of people, right? When we're not watching, when we're looking at just the price action, that's why I preach about having the value plus the price action. I think that that's so important, because if you're not paying attention to what's happening underneath the subsurface level of the market, not just what's happening with just price, but where value is being established and value and price is moving towards and away value, then we can restructure how we're looking at the trade, and we can anticipate things to happen. And when they don't happen, we don't go, well, crap, the trade's over at that point. My anticipation now is that a lot of people were trapped to the downside. They reversed because the trend line was broken. Momentum seemed to be established to the downside after this 30-minute consolidation was broken. And now it looks like we're going to break out to the upside. So what's going to happen now is all these people that established shorts in this area here are now going to get blown through, and we could have an explosive move to the upside. So anyways, that's why I think it's important to pay attention to both and the nuances and how the trend and the trajectory of that trend versus the market structure. Because what would have happened now is if price had continued to break lower and we'd have made another new low, then price structure would have kind of confirmed everything that was happening, and then eventually a new trend line is drawn to the downside, and then the process repeats just to the downside, right? And then we look at value versus price action and all that, and then we're able to make a better informed decision on what we think is going to happen, set up our risk reward levels, and then ultimately set up multiple scenarios. So anyways, I hope you got some value out of that, and I know it was kind of a long-winded explanation, but anyways, until next time, happy trading.